following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, 6 more days to go. We'll see how it all ends up. We're going to start out today like we usually do, taking a look at the DAX index on the 30-minute chart. As you can see, we went right down to a 61% retracement. We did gap down this morning. So far, we've held that low. That was one of the reasons why we started to rally in the S&P. And I'll cover that in just a minute. But this is what we're looking at here in the DAX. The gap down is a little bit troubling if you're on the long side. But frankly, that it held at the 618 exactly is a pretty good indication of what we're looking at here. Tomorrow's show, we're going to have an astrological show. We're going to have Shane Smolian of wolftrader.net for the first half hour. And we'll also have, on the second half hour, Norm Winsky from Astro Trends. I've tried to get Bill Meridian from Cycles Research out of Vienna, Austria, but he's traveling, so we're not able to get Bill. But I did chat with him, and he still believes that there's going to be a surprise on November 8th, as does Shane, and so we'll see how this all works out. Who knows? It's just astrology. Some people, I think one of the quotes was, astrology, no, I know what it is. Economics exists to give astrology some meaning of acceptability or something like that. All it is numbers, folks. That's all it really is. All right, the next one we want to look at. Oh, let's talk about Brexit for just a second. I was there in May. I spent several weeks in London visiting friends. I had a couple of seminars to do with my students over there. I have a lot of students in the UK and Europe. And, oh, we got a caller. We'll get to that later. So let's talk to Dave in Clearwater first. Dave, how are you?
I'm doing well, Larry. That was actually, that might have been more entertaining or better to listen to about your Brexit story.
No. The markets are much more entertaining than anything I have to do, my friend. So
I don't know about that, Larry. I'm not trying to blow smoke, man, but I really like listening to your stories. Anyways, I've got a question for you.
Yes.
Looking at the Canadian-U.S. dollar pair.
Yes.
And it's looking like this thing just completed here in the last couple of days a major, or at least what I think to be a major ABCD up, with the A point being back in on May 3rd. And
yes,
the
we
B
certainly
point
did.
around the 24th of May, and the C point being around June 8th, and then also did another ABCD up. So it looks like it's completed 2 of them, with the second A point being the June 9th also, with this B point of July 26th, C point around August 18th. So here's my question. Strong correlation, as you and all the gang at TFNN have pointed out, between the Canadian dollar, U.S. dollar pair, and oil. Mm-hmm. And with oil heading south here over the last several trading days, and the Canadian dollar is not getting any weaker, i.e. meaning moving up relative to the U.S. dollar, it's looking like maybe the oil might be turning around. Maybe, we'll see what happens here. It's hitting some support levels here, as you've been pointing out to us. I don't know. Here's my deal. They completed an ABCD up, and I'm thinking about shorting this thing with the thought that, with oil moving higher, it should put some strength in oil, but then there's the potential for the interest rate increase, which might nullify that. And I'm kind of in paralysis, Larry. I guess I should just trade what I see and short this thing and forget about the fundamentals for a minute, but it's like I could make a case to short it. I can make a case not to short it.
Well, the number one rule on my oil painting behind my back here is when in doubt, stay out. And that was from Jesse Livermore. So unless you have something that really makes you want to do this, then you just wait to see till something is a little more clear. I am going, let's just do that now. We've only got a few minutes left, but let's take a look here at the oil market, because we've been watching this for the past several days. Let's just put this chart up so the folks can see it. You're right. We are what we call spot on to a place where we should have major support right around this area of the 45.80 level. That takes us down, to our 61% retracement of the low from mid-September, and it's at the 50% level of the low from, back in August. Now, what I'm doing, Dave, is I go to a smaller time frame here, especially when we have the Fed working today, and I'm looking at December crude. So let me just put this up here so the folks can, see what I'm looking at. But this is over the last 3 or 4 days, going back into the 31st. You'll see we've had a couple of moves of over $1 a barrel. You'll notice that we have this very strong ABCD pattern ending down here at the 45.75 level. So that's the area that I'm watching very closely. I know we're trading a tad above that right now, but I still think we've got a chance for that to be hit, just a little bit. We're trading at 45.94 right now. We only need 20 cents, but that would be the spot where you only have to risk very much. That's really, the really thing that you look at. Also, one of our listeners here at TFNN alerted us that we've had a really nice pattern, the 135 pattern in the Canadian dollar also. So what you're thinking about is absolutely true. What you have to decide is which of the vehicles do you want to take? Do you want to take the Canadian dollar, or do you want to take the crude oil? Now, the Canadian dollar is a less risky trade because of the fact that the volatility is so much less. In other words, you'll see crude oil move $2,000 in the blink of an eye. You don't see that in the Canadian dollar. So it's much less risky trading the U.S. dollar versus the Canadian than it is trading crude oil. Do you grasp that? I mean, because that's
yes, sir. Are you kidding me?
You know how crude oil moves. Everybody, yeah, you're right. That's exactly what happens. So it depends upon your greed factor and also your tolerance for risk. But if I had to choose, I would be watching the Canadian dollar, for a potential turn, because the correlation on these is incredibly high. It's in the neighborhood of about 85%. So we'll see what's going to happen with that. So we'll watch it very closely. But I think you're right on, spot on with the oil. We've been watching it all week. I mean, we even end of last week, after we made that ABCD pattern at 52, we've come down, $6 a barrel right to the equal. And that's equal to the move we had down in September. So you've got a lot of reasons here, to take a look at it. That's the main thing to keep in mind.
May I ask, going back to the Canadian dollar, because I completely missed this, what the 1 point, the 3 point, the 5 point is that on a daily?
No, that's on a half hour. That's on a half hour time frame, but it's still lining up pretty nicely. And whether it works or not, we'll have to wait and see. But that's the main thing. One other factor.
Sorry to interrupt you, Larry. I just dialed down to a 30-minute when you were talking. I just picked it up. Okay, sorry. My bad.
The other one that looks interesting, Dave, is if you take a look what's happened to gasoline futures. We had that big explosion down in Alabama that took a few lives and, sent gasoline prices moving, 20 cents a gallon. But look how quickly they dropped 20 cents a gallon. So that's telling us that possibly, we're not near the bottom in crude oil, but we could be very close.
Awesome. Thank you so much.
I hope that helps. Hey, thanks for calling in, Dave. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look here at a chart that was furnished to us by Bill Meridian out of Cycles Research in Vienna, Austria. This is the Jupiter cycle that he talked to us about several months ago. As you can see, it's been following along with a very high correlation, and it does say that there's going to be a bullish bias sometime starting about now, going early into 2017. Now, these cycles can invert, as you know, but this is something that he believes in quite strongly. We'll have to wait and see, but don't be surprised. I mean, the market is coming down, but it's very, very orderly. I mean, there's no panic anywhere at all. I mean, the most we moved yesterday in the Dow, I believe, was 200 points. We were down 200 at one point, and then came back 150 of those points, making a 61% retracement overnight. So these patterns do work, but we have a real critical thing happening here in our elections on November 8th, plus we have that big Bradley date that is also out there that we've seen several times before. We'll post it in here again, to show you, because we could be looking at something, really dramatic. I believe that we're going to see increased volatility. I don't think there's any question in that. We're seeing that all over the map already. So that's, an important thing to keep in mind, when you're looking at this, because this VIX, every time we get down to that area of around 13, you'll notice that you'll see this market have a tremendous rally, and we've done that. And as if you look at the VIX overnight, you'll notice that we went almost and touched the September 10th high. That we got almost to that 21 level. We got up to 20 and change, and then of course we backed off. We'll probably attempt that again today in that level. That's going to complete that ABCD pattern. So that's something that you want to to watch also, because we are going to see increased volatility. I don't think there's any question that you're not going to see this volatility index somewhere in the next few months trade into the 40 range. I know that seems like a lot, but it really isn't, because you notice, back in September, it doubled in price in 3 days, and it can do that again very, very easily. So 20 to 40 is not a really big stretch in these things. So we want to watch that to see. Now, someone asked a question, do you have a chart of the Bradley model that is not inverted? Yes, I do. But the problem is, what I try to do, Gator, is I try to follow the one by using observational influence. In other words, I look at the chart and I try to see what the correlation is, and it's correlating very, very nicely right now. So I have to keep that in mind. What I'll do at the break is I will put it in and I will invert it so you can take a look at it, because it certainly could do that without too much trouble, because we're not having a lot of breakdowns, and there's some of these indexes are down in an area where you've got to have some pretty good reasons to go short. Let's take a quick look here at the IBB, which is the biotech index. If we look at the biotech index here, you'll notice that this is a daily, going back well over a year and a half. You can see, we had the island reversal way back there in July. That was pretty much a no-brainer. What we do, we rallied back to try to touch that gap, which we did not. We had a huge break where you see that hammer bottom. That was during the flash crash, and then you had the ABCD move to the downside in February. And since February, we've been basically going sideways with a little bit higher highs and a little bit lower and lower highs, so higher lows. So we've been in a more or less a small uptrend here. I mean, even though we're biased to the downside, but we just hit a 78% retracement yesterday at this 255 level. So this should be some pretty good support here in the biotech index. I mean, the risk here on this is, I would think, relatively small. If you'll notice, when we hit that 61% retracement, we did bounce a little bit. We didn't go very far, but at least it held. We might do the same thing here. But if we get below 250 in this, folks, you're looking at something that's going to be trading below 200, not in the not too distant future is what it looks like. It's really, quite amazing. Now, let's just switch over to the S&P here for a minute, because we were watching this yesterday. I wanted to explain one of our questions that I had last night by email was why that area of 215 was so important. The only reason that was important, folks, it was the low that we made several days ago. And as you can see, all I did was draw just a normal trend line from that low. And once we broke that, then you have a real, and you broke it with a lot of gusto. And then you had the big move, of course, to the downside. But what's important about this is that after we hit that 2091 level, we immediately made an ABCD correction, and the market, rallied to 19 points, which is not an easy task in that S&P. So there was some buying, that came into it. Now, let's just switch over for a second and see where we were at coming into the week. And that's what I think we'll keep an eye on, because here again, you'll see that the importance of that 2113 level. Now you've noticed that we've broken down below this pennant that we've had here. And you notice that our support comes in at that 61% retracement, which is around the 2060 level. So that should be a very important point. That's also parallel channels from the high through February and August to where we are from June to where we are right now. So the next step that you want to do is to blow this up so that you see if all this starts to fit together into a format that tells us that we might getting down to this 2060 level. So the next step we do is we go to a daily chart, we only look at it over the last 4 months, not over the last year, because then you're able to see it, a lot clearer. So if we put that in here to take a look at it, you'll notice that you'll see that we had the 1, 2, 3, 4, 5 expanding triangle pattern, the reverse point wave, a perfectly symmetrical one, stopping almost exactly where we should have at 2194. And then since that time, which was, on August the 15th, I think the actual high was a tiny bit higher on August the 25th. And then since that time, we've been coming down. But notice the support that we're going to have at this 2065 level. That's a 61% retracement off the low of June 27th, which is a Brexit. Now, isn't it ironic here that we had that major low in Brexit on the 27th, and here in 6 more days, what are we going to have? We're going to have our own little version of Brexit. So we're going to see if someone's going to drain the swamp, or we're going to put in new lifeboats and see how we get through all this. But no matter what happens, folks, we are going to make it through. We live in a great country. Somehow, you know, when you look at your dollar bill, it says, "In God we trust," and that's what you have to do, is put your faith in her, and she will lead us to the promised land. I'm sure of it. She's kept us going for 242 years, so I don't think she's going to, you know, abandon us right now. This is not the end of the world. You can see it from the edge of town, but it's not the end of the world. Notice the two ABCD patterns that end up perfectly at this 2065 level. Folks, this is screaming that it wants to go down to 2065. That's another 300 points lower in the Dow Jones. Do we make that in 1 day? Do we make that in 1 hour? Does it take 3 days to do? These questions I can't answer. All I can say is there's a very, very strong probability that we're going to get down to that area, you know, very, very closely to that area 2065. All right, we'll take a little break here to pay some bills. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart for the Dow Jones industrial average with the regular Bradley model. It's the one that's not inverted. It's the exact mirror image of the one that I posted in the newsletter, because I think that's what we're looking at. But you can see here we could easily turn here and move up into February, and that matches perfectly with what Bill Meridian is looking at. And so that's the problem with the Bradley model, folks, is it does three things. One is it's pretty good at picking the dates. In other words, a Bradley turning date, we have one of those back on I think the 13th of October. We got another big one coming on November 8th. So there's another one that we have. And of course, the market's opening this morning. Folks, we are at the promised land in the crude oil. Here's where we are. And if you believe in patterns, and some of us do, we are really, really close. We're down here at 45.78. I was looking at this level between 45.78 and 45.65. So if you think like Yogi Berra, when you go to the dance, you got to dance with the girl that you took. So remember that this is where we are in the crude oil. So watch it very, very closely in here, folks. This is a real interesting spot in oil if you like patterns, which I do, and if you like ratios, which I do. This is where you want to pay very, very close attention to the crude oil, because it did hit the number pretty much spot on that what I wanted to see. So we're pretty much, well, we've already rallied $200. So get out of that trade. You've already made money in that. It's just jumping around a lot, folks. I think this is a pretty good bottom in crude, but watch it very, very closely. As you remember, the chart that I put in there on the gasoline futures with that, explosion they had in Alabama, anytime you can get gasoline to rally 20 cents and drop 20 cents, it's really an amazing, amazing move. That's 6,000 up, 6,000 down. That's a $12,000 move in a matter of about 3 or 4 hours. So that's one of the problems that people have to look at and see what that's it. We're having some people, are saying that, we have some possible lower lows in some of these things, but this is the number we've been waiting for here in the crude oil. The only thing that would make it perfect would be if we were already out at the 7th or 8th of November, because then you would have perfect cyclicity between, that's a pretty big word, between the lows that we had in August, September, and where we are in November. So that's it. So anyway, let's keep an eye on it. Maybe it works, maybe it doesn't. The Australian dollar trade that we looked at yesterday, worked very, very well. So sometimes they work, sometimes they don't. But remember, you're the one that have to take the responsibility for it, because only you can determine how much you can put into a trade and whether you're going to be able to make any money on it or not. That's the real key, to be watching. Someone else asked a question about the hogs that we talked about. We did hit that level of 47.50 in the December hogs. The high was 48. We backed off a couple of cents from there. We believe that we're going to be a little correction here in both hogs and cattle, and we'll see if we can do that. We'll have Rich Anderson on just as soon as we can get a really good time for him to come on, but he's very, very busy this week. Now, there is a chart up here. We've got to get to the interest rates because we had the Federal Reserve in here today. I believe it's around 11, 1 o'clock in the afternoon over there that she starts to come out. And, I don't like trading, until after she's done talking. It'll give you plenty of time to look at it. But this is something we've been watching for some time here in the show. So let's just take a quick look here at the high grade or high yield bond, not high grade, high yield bonds, i.e. junk bonds. And as you can see, we had this major divergence, and this divergence has now caught up with itself with this big move that we've had, dropping down better than 5% in just a matter of 6 trading days in high grade bonds. As you can see, we had that 3 drive to a top pattern up there at the 87 level, and now we're trading down, below 85. So this is a pretty big move. It's got some gaps in it, which is not unusual for this ETF, but it's telling us that something big is coming in interest rates. This is not a surprise, because we should get a rally after the Federal Reserve raises rates. We should get a short-term rally, and the reason for that is the market is incredibly oversold, as we all know. And all that would do is just rally it back to another selling point. Now, if we take a look at bonds here, over a shorter time frame. We're just going to look at it on an hourly basis. Actually, this is a 4-hour chart. You notice that it rallied for 7 days. That's the first rally high. The second rally high, 7 days. Where did it rally to? To a 382 retracement. We came down, and what did we do last night? We rallied up to an exact 61% retracement of that high at 163.28. We've already dropped $1,000 from that level, telling us that that's a very important point. So what we'd be watching now, and this is really important, folks, because we talked about this yesterday. Well, it's important to me. It might not be important to you. But if you look at the time frame between October the 14th into the high that we made on the 21st to the low we made on the 27th, the rally we had last night, if you consider this part of an ABCD structure, it's going to take us, yes, boys and girls, you'll never guess, 161.05. That's where I would like to be a buyer of Treasury bonds, because that is going to be a 61% retracement on the daily. It's going to be a 3 drive to a bottom pattern on the 4-hour chart, and it'll also be a 1.618 expansion on the 4-hour chart. So you got a lot of things to look at, but keep an eye on 161.05. And with the Fed in there today, you know, anything could certainly happen. There's no, I don't think you'd have to be a third grader to figure out that, because frankly, I think she's going to raise rates today. And the reason why, everything else is so screwed up in the news. Why wouldn't she? She has nothing to worry about, because she's fighting for her job for one thing, and there's so much political stuff going on now. It would not surprise me to see rates go up. The market has been telling us for 6 weeks that rates are going higher. Only the Federal Reserve has not got the message. So that's the key, to keep in mind what's happening. Folks, there's going to be in the S&P, we've had this little bit of jumping around here this morning, but the really strong resistance in the S&P, folks, comes in at the old low where we broke out of it, 2113. That's where the real resistance is. It's not unusual for the market to go back and touch those levels, one time or another, because you see it all along. This is why technical analysis is so much fun. Just to give you a perfect example of this, let's just take a look at something we looked at just a few days ago, which is the sugar market. And you'll notice here that we had the big expansion at the 1.618 level. And look where it stopped last night. It stopped exactly where the old highs came through at that 2110. We haven't taken that level out as of yet. We might in a few minutes, but right now that has held up as pretty good support. Now we've come down $3,000 from the high, and that's been one of the stronger corrections we've had in the whole year. So this is also one that looks pretty interesting, and that number that we hit, 2110, is a 61% retracement of the low in July. So some of these things are lining up. So we'll take a look at just a minute, take a break. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look at gold. As you can see, this is the daily chart, going back since our low in last December when we had that 3 drive to a bottom pattern. We had a very perfectly symmetrical correction like we had on the first one from December. You'll notice that low in December was the exact amount in dollars. And so this tells us that when we hit that 78% retracement from the low in June and 50% retracement from the low in December, that tells us that was very, very powerful. Now, this is what we have to pay attention to, folks. As you can see, we rallied to a $1,300, $1,301, I believe, so far this morning. The real key here is going to be this 1313 level, because that's where gold broke down from. As you can see here, from that 0.5 that you see on the chart, there's a little triangle line that I put there, because once we broke below that, that told us we were heading down. That was the day we had the $50 down move in gold. That's been dissipated, folks. I mean, everybody that sold it on that day, almost everybody, with exception of those that sold it early in the morning, are now sitting with a loss. So if gold can get above 1313, you're looking at gold at 1500. Because all you have to do is add up this ABCD pattern, and that's where it's going to take you. And it's so perfectly symmetrical that you should pay attention to it, I would think, because that's all we have to go on. I don't do any fundamentals. I can't count the number of ounces anywhere, but I can certainly, look at a chart and see whether it's got patterns that'll take us up to that level. And it could very easily make that, because that's just $300. We had a $350 rally off the bottom. We had a $150 break, which is the 50% level, and you add the ABCD leg, that takes you to 1545. So we could easily do that. Now it's going to give you plenty of chances, and what I'm waiting for is I'm waiting to see if we get a nice ABCD structure here over an hour or 4-hour chart over these next few days, and we certainly will have some increased volatility. But the reason for looking at this particular chart is the fact that you want to be watching this level of 1313, because if we pop through that, that is going to tell us that this whole thing is getting ready to go a great deal higher. So watch this very, very closely, because we've got a really good chance here in watching this. If we take a look at the silver, this will be just 1 second here, because I wanted to, oops, I don't have the silver. Anyway, once we went up, we did have silver yesterday. Here it is. Sorry, folks. Let's get it up here, because we've already, this is the one just a little bit lower, because we went another 40 cents higher here, 50 cents higher in silver, because once we broke that 1795, 1800 level in silver, that was the last area of resistance, and off to the races. And we're seeing the same thing in some of these other metals, including copper, which is still acting relatively well. I mean, the copper, if you'll take a look here, I think we've came within a penny or so of this exact ABCD structure in the copper, which was at 224.5. I believe that's pretty much where we're trading right now. I haven't checked it yet this morning, but that has completed that ABCD pattern, and you can see the sequence of lower highs that we've had here, but we've also had higher lows, so this is in a really tight triangle, and we could break out of it at either way. But right now we are completing this ABCD pattern at the 78% level at this 224.5 level to see if that's going to be, see what's going to be going on, with one of these other things. Now, I've had a question about a couple of stocks that people have asked about. One of them here is the Twitter, and we'll just put this up here because it's still in the same range here. Just give me 1 second here. There we go. And we'll get it up here. You'll notice that, we had the big ABCD structure in Twitter. This was during the time when they were trying to, feed them tapioca to buy it out, and that didn't work. And when all three buyers, decided not to do it on the same day, you don't have to be a rocket scientist to realize that there's something rotten in Denmark. And I love Denmark. That's one of my favorite countries. But believe me, there's rotten tomatoes everywhere. When you see that kind of news comes out where the reporter says all three of them, Disney, Google, and Facebook, all pulled out of the Twitter negotiations within a few hours of each other, give me a break. You don't have to be, I was born at night, but the light was on. So keep in mind that, some of these things that they tell us are not true. But we hit the 78% retracement spot on Twitter at 1630. We did rally up to 18 and change. We're trading at around 1744 this morning, 1774. So that's what Twitter looks like from that particular move. So keep in mind that's what we're watching here, with Twitter. I don't think it's going to be anything really dramatic here in Twitter, but they had the chance. Now I think if they want to buy it, they will buy it, at a little bit cheaper price. Now let's take a quick look here. I had another request about taking a look at Tesla, and we're going to be looking at that here. We have some really nice patterns in Tesla. I don't know if it's going to make it or not, but if you look at this, we've had lower highs since July. We had the big ABCD pattern that was perfect, went right down into February at the 143 level. We rallied, almost doubled in price, 143. That would have been 288. We got up to 270, so we almost doubled in price. And now we're in the process of completing this big Gartley pattern that ends down about another 10% from where we are right now. So if you can see let's try Tesla, down around the 174 level, then, that would be a place where it'd be a low risk entry. The problem what I have with this, folks, is I just don't understand why anybody would buy a car that they can't hear, because that defies all descriptions of what the Beach Boys talk about. Haven't they ever heard of 409 and a Little Deuce Coupe? Give me a break. Okay, that's what I'm looking at with the Apple. Now, I had one other comment, and that was about this not UPS. Give me a second here. It was WIN, and I wanted to bring this up to your attention here because this is something that we would like to see happen if we get it. I believe WIN has rallied up above it's got above 98 level. So this pattern in WIN is not going to happen the way we wanted it to. So there's no setup here in the WIN chart that I see. I would like to have seen it make a double test down around the 91 level. We're trading at 98 and change right now in WIN. So there's nothing that you can do here in the WIN to make you think that you've got a really low risk entry trade with that. So that's really what we're watching in the WIN stock. Now, I had one other question that someone asked me, and that was about the dollar index. We've been talking about that, and we talk about it every day because it's that important. As you can see here, we had strength in the euro last night. We are now down to this level. You'll notice we hit the 382 this morning in the dollar index at this 97.28 level. I believe that was the exact low. That's what I checked earlier this morning, but this should be it. And if you remember here, this is back at the old 61% retracement of the breakout high from July. So this is another one of those situations where we got major stuff here, the dollar index at this 97.28 level. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to change direction here a little bit. Tomorrow we're going to have Shane Smolian and Norm Winsky, our two astrologers, on. Shane will be on the first half hour, Norm the second half hour. Friday I have a previous engagement. I'm not going to be able to be here. I'll start again on Monday, hopefully get the election process started. But I wanted to mention here about when we were talking about Tesla, the fact that it's silent. As most of you have heard me mention before, that I've known the Beach Boys for quite some time through my affiliation with my best friend, Jay Crosp, who was the man who worked with Amos Hofstadter at Commodity Corporation, back in the 1960s. We lost Jay the same week that we had the OJ problem back in '97, but we really got to know the Beach Boys very well. Mike Love and Bruce Johnson live in Santa Barbara, California at the Montecito Country Club, and many years ago, Jay and I went there, to visit them, and we went to Bruce Johnson's house. He had a 32 Ford coupe, little roadster, just like the Little Deuce coupe in black, and then we went over to pick up Mike Love before we went to lunch, and he had the same car in red. And so it was really, they live their lives the same way that they sing. By the way, if you ever want to see a movie star and you're in Southern California, the two places to go, if you're in Southern California, go to the Philosophical Institute up on the top of Mulholland Drive. That's the home of Manly Hall. It's the big museum where you see the big picture of Pythagoras, the old painting that I always talk about. And then if you're in Santa Barbara, which is about 90 miles north, go to Tootie's in Montecito. It's a little cafe there, and you cannot go in that place. I don't care what time of the day you go in. You will see an actor, a movie star, or somebody very, very famous. They're just there all the time. It's really amazing how many people live up in that area, because it's really a beautiful area. The thing to remember, folks, 2113 in the S&P, that should be strong resistance. If we get above that, that will tell us that maybe this bottom has finally occurred. Frankly, it looks like it's not going to happen until November 8th, but we'll have to wait and see. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.